Good day, everyone. Trust you're doing well today. So, what if I told you there is a bond mutual fund in Nigeria that has been quietly growing, quietly surviving, and quietly paying people since 1997? The fund has lived through five Nigeria presidents, three recessions, multiple currency crashes, and somehow is still standing. Today, you and I are going inside the mysterious world of the Nigeria International Debt Fund, NIDF. And if you stick with me to the end, you will find out its transformation, very shocking transformation in 2008, and why this investment may actually be the smarter choice than many other shining investments you have out there. Let's begin. NDIF is a bond mutual fund managed by Afri Invest. Imagine a basket filled with government bonds, corporate bonds, and a pool of money market instruments. It's open-ended, meaning you can enter and exit the investment at any time you like. However, not immediately, because there is a 182 days lock-in period. Think of it like cooking jollof rice. If you open the pot too early, you ruin the whole flavor. However, the goal is simple. It protects your capital and pay you steady returns. NIDF was created in 1997, back when mobile phones had not even landed in Nigeria. It was originally for international debt instruments like foreign bonds, but everything changed in 2008. Afri Invest just didn't update the fund, they overhauled the investment. In 2008, it changed from a closed-end fund to an open-end fund. Their focus shifts from international denominated bond to local Nigeria denominated bond. Next, they added FGN bond, state bond, and strong corporate bond. Next, they reduced bonus style payouts and focused more on reinvestment. It was a full makeover, a financial rebirth. But here is the real mystery. Why did they do it? They did it because the global market was shaky at the time, and local investors needed something stable, something that would not collapse every time foreign markets gets to be shaky. This shift changed everything, and it set up the next part, which many people overlook, which are: one, it's safe because government bond never fails to pay coupon. Two, diversification, which means your money is spread everywhere. Three, fair entry level. With 50K, you get to buy 50 units. Four, moderate liquidity, which means it's redeemable after 182 days. Lastly, number five, tax free. Well, historically, coupons payment has been tax friendly. So how do you invest in this type of bond mutual fund? Option one, online. You have to go to Afri Invest website, click on products, click on mutual funds, then you see the NIDF option. Just click on start investing, register and fill your KYC details and get onboarded. Option two, through an Afri Invest staff. Walk into any Afri Invest office in Lagos VI precisely. When you get there, you ask for the NIDF application form. They will gladly guide you on how to fill the form and and every process that is attached to getting onboarded for you to start your investment journey with them. Option three, which happens to be the most flexible one, is you can actually choose to invest via Carrywise. Just register on Carrywise and you get automatically onboarded to buy your preferred amount of units, and the least you can actually buy is 500 units, 50K, that's 50,000 naira. And that's how you go about it to register and start investing. If you gain any value from this video, please subscribe to this channel so you do not miss my next update. Thank you.